welcome to the UTI Asset Management Company Limited Q4 and FY2024 earnings conference call. From the management, we have with us Mr. Imtiyazur Rahman, Managing Director and Chief Executive Officer, Mr. Vinayak Lakhotia, Chief Financial Officer and Head Corporate Strategy, Mr. Surojit Saha, Group Financial Advisor, and Mr. Sandeep Samsi, Head Investor Relations, Marketing and Corporate Communications. We also have Investor Relations team from Adfactors PR. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Please note the disclaimer mentioning these risks and uncertainties are on the disclaimer slide of the investor presentation that has been shared earlier. I will now hand the conference over to Mr. Imtiyazur Rahman, MD and CEO, for opening remarks. Thank you, and over to you, sir.
Thank you very much. Good morning and welcome to our earnings call for the fourth quarter and financial year ending 31st March 2024. We appreciate your presence today as we discuss our operational and financial achievements. You may have read our press release and investor presentation, which are available on our website and the website of the stock exchanges. The financial year 2024 has indeed been a stellar year for the capital market and for the investor community. The year brought in numerous opportunities following the phase of normalization in financial year 2023. Throughout the year, we have witnessed a resilient surge in growth, driven by robust positive sentiments towards consumer demand and substantial capital expenditure. Despite tight monetary conditions and a challenging geopolitical landscape, India has maintained its position as one of the fastest growing economies, building upon the momentum gained in the previous fiscal year. The latest South Asia Development Update by the World Bank, released in April 2024, projects India's growth to reach an impressive 7.5% in financial year 2024. This optimism is supported by the stellar Q3 GDP growth at 8.4%. Other noteworthy developments were the increase in India's weightage in the MSCI Global Index to 18.2%, more than double what it was 3 years ago, and the inclusion of Indian bonds in the JP Morgan EM Bond Index, which is expected to take effect by the end of June in the current financial year. In the mutual fund industry, we have observed a significant evolution in recent years. The equity market surge in financial year 2024 has been instrumental in attracting net inflows of approximately 3.54 lakh crore, pushing asset under management to a commendable 53.4 lakh crore as of March 31st, 2024. This surge of about 35% from the last year has created substantial wealth creation opportunities for retail investors and has led to a notable increase in their accounts. According to the latest data from AMFI, as per the March 2024, AMFI reports more than 60% of assets, that about rupees 33.3 lakh crore based on average AUM, are held by individual investors. Going by the composition, around 84% of the individual investor assets, including HNI, are held in equity-oriented schemes. Friends, if we speak about the geographical opportunity for mutual funds, only 18% AUM are coming from beyond 30 cities. Another interesting point is that the share of women investors in AUM was close to 23% till February of 2024. This is an opportune time to bring in substantial investors from these cities into the mainstream financial ecosystem while reinforcing mutual fund industry's significance in the country's economic structure. At UTI, we are well positioned to harness the momentum from both B30 and T30 cities, leveraging the changing investor behavior and improving financial literacy. UTI has been expanding its footprint into new locations across India, particularly in Tier 2 and 3 towns. Our strength in beyond 30 cities remains steadfast, accounting for close to 21% of our AUM, with a total folio count of 40.87 lakhs, which is 33% of our total folio. This success can be attributed to our consistent efforts in these towns for onboarding of new investors and fostering long-term relationships with them. During the year, UTI opened 29 new branches in the Tier 2 and 3 cities, and we will continue to expand our presence in the smaller towns during the current fiscal as well by using the digital infrastructure. Our strategic focus has been on enhancing supervisory efficiency within the sales function, introducing innovative sales models and roles, and expanding our product offerings for distribution at key counters. We have strengthened our engagement with our distribution partners, and during the year, our fund management and product team traveled across the country and conducted 106 meetings. Of these, 43 meetings were in the top 10 cities. We have also reached out to potential investors, conducting investor awareness programs across Bharat to raise awareness about mutual fund industry to the first-time investors and benefits of investing through SIPs in the mutual fund. As a part of this commitment on financial literacy, we partnered with Dainik Jagran to conduct investors awareness program across 40 Tier 1, Tier 2 and 3 cities. Our mega IAP event in Varanasi in December 2023 garnered significant retail participation. We will continue to use IAPs to create investor awareness. Our new and revamped website catering to investors and distributors offer enhanced accessibility and functionality. All digital assets of UTI mutual fund are now consolidated under our digital platform UTI Heart, indicating our commitment to providing a delightful experience across all touch points. Leveraging on the digital network, we have hosted online sessions with our fund managers on the debt and equity market outlook. We have undertaken a comprehensive innovation of our corporate office premises, focusing on ease of comfort and accessibility to create an appealing working environment for our stakeholders. Over the last year, we have strengthened our focus on sustainability and responsible investing, and ESG has been deeply embedded in our investment processes and operations. We have developed sector-specific ESG frameworks and are continuously building capabilities for value-driven investments. Continuing our commitment towards environment conservation, we have implemented cutting-edge processes such as biometric KYC and a Go Green option for selected after-sales services. During the year, we launched UTI Balanced Advantage Fund. In the month of July, the fund has an AUM of rupees 2,750 crore as of 31st March 2024. This product launch has helped us complete our offering in the hybrid category of funds. Also, we now have 5 products under the Smart Beta category with total AUM of more than 5,500 crores. These Smart Beta products have helped us addressing the growing demand of our products in the market. Additionally, we have launched our 2 differentiated products, namely Nifty 5 years and 10 years G-Sec ETF during the year for institutional investors. While the aim of these funds is small, we now have 2 products in the upcoming category. On the group level, we are delighted to share with you that UTI International obtained license from the French regulators for business operations in European region through our Paris office. This will give us on-ground presence in continental Europe and create significant business opportunities in this market. Our retirement solution business has obtained a point of presence license from PFRDA and NOC from SEBI. The POP license will allow UTI RSL to reach out to new pension fund investors and engage the services of partners to grow the business. For our AIF business, we have received SEBI approval for starting operation in GIFT City in Gujarat. This will enable foreign investors to invest in our domestic AIF funds. UTIMC and UTI Investment America Limited have been registered with the Securities Exchange Commission USA, and we are planning to start our operation in the USA. The total AUM for UTI Group has increased by 19% to 18.48 lakh crore as of 31st March 2024, compared to rupees 15.56 lakh crore during the previous financial year. The domestic mutual fund business has witnessed a commendable 22% growth, reaching to 2.91 lakh crore against 2.39 lakh crore last year. For further insight into UTI mutual fund performance and other operation updates for Q4 and financial 2024, I now invite my colleague, Mr. Sandeep Salti, Head of Investor Relations, Marketing Corporate Communication, to provide with more details. Over to you, Sandeep.
Thank you, sir. I will first take you through UTI's performance during the fourth quarter and financial year ended 31st March 2024. UTI Mutual Fund's performance. UTI was able to capture a market share of 6.84% of the gross sales of the industry during this quarter and market share of 7.79% of the gross sales for the financial year 24. Our equity quarterly AUM for the quarter ended March 2024 stood at 84,777 crores, rising by 20% as compared to the quarter ended March 2023. Quarterly average AUM for index and ETF stood at 1,15,448 crores, up by 39% in the fourth quarter, commensurate with growth in the overall passive investment. ETFs and index fund net inflows stood at rupees 11,682 crores. UTI added 1.92 lakh folios, taking up the number of live folios to 1.24 crore as on 31st March 2024. Our SIP AUM witnessed growth of 42.95% over the corresponding quarter of the last year, reaching to rupees 30,747 crores as on March 2024. The SIP inflows for the fourth quarter stood at rupees 1,772 crores. The SIP gross inflows for UTI Mutual Fund witnessed a year-on-year growth of 5%, with an average SIP ticket size of being rupees 3,164 rupees for March 2024. For the full year, the SIP inflows were rupees 6,767 crores, higher by 5% compared to 6,463 crores in FY23. On UTIMC's financial on consolidated basis, during the fourth quarter, the company posted a consolidated net profit of rupees 163 crores, higher by 90% year-on-year and down by 12% quarter-on-quarter, while a consolidated revenue from operations for the fourth quarter stood at rupees 416 crores, up by 38% year-on-year. Consolidated core PAT for the fourth quarter is rupees 96 crores, up by rupees 68% year-on-year and 22% quarter-on-quarter. For the full year, the consolidated net profit was rupees 766 crores, higher by 75% year-on-year, and consolidated revenue from operations was rupees 1,737 crores, up by 37% year-on-year. For the full year, the consolidated core PAT was rupees 345 crores, up by 8% year-on-year, and the core revenue from the same period is rupees 1,182 crores, which is up by 5% year-on-year. On standalone basis, the PAT of UTIMC Limited for the fourth quarter FY24 is rupees 151 crore, reflecting a growth of 54% year-on-year and 1% quarter-on-quarter, and core PAT for quarter 4 of FY24 is rupees 91 crores, up by 71% year-on-year and 40% quarter-on-quarter. The PAT of UTIMC Limited for FY24 is rupees 601 crores, higher by 41% year-on-year. Core PAT of UTIMC Limited for FY24 is rupees 293 crores, up by 6% year-on-year. Our 100% owned subsidiary UTI Retirement Solutions Limited has recorded a growth of 25.74% year-on-year in its AUM, reaching rupees 3.03 lakh crores in quarter 4 FY24 and currently manages 25.8% of the NPS industry's AUM. The PAT of UTI Retirement Solutions for the full year is rupees 54 crore, an increase of 16% year-on-year basis. UTI International, which represents our international business interest, has an AUM of rupees 27,645 crores as of 31st March 2024, up by 27.4% year-on-year. Our international clients are across more than 35 countries. These are primarily institutions, pensions, insurance, banks, and asset managers. One of our flagship funds, the India Dynamic Equity Fund, domiciled in Ireland, has an AUM of $951.77 million. UTI International J. Safra Sarasin Responsible India Fund and ESG Compliant India Fund has an AUM of $74.66 million. UTI India Innovation Fund, launched last year, has an AUM of $41.33 million. On UTI Alternatives Private Limited, UTI Alternatives Private Limited has a total AUM of rupees 1,974 crores. It has a well-defined ESG policy and strategy in place. It currently manages the following active debt funds: UTI Structured Debt Opportunity Fund, which is called as UTI SDOF 1, for which we have received a SEBI approval in August 2017 and which closed in May 2019. It has an AUM of rupees 132 crores. Currently, the fund is in exit mode. UTI SDOF 2 has an AUM of rupees 519 crores and the fund is currently in investing stage. We had received the SEBI approval for this in February of 21. UTI Multi Opportunities Fund 1 has an AUM of rupees 763 crores. Currently, the fund is in investing stage. SDOF 3, for which we have received a SEBI approval in April 2022, has an AUM of 433 crores. The fund is currently in fundraising as well as investing stage. UTI Real Estate Opportunities Fund 1 is currently in the fundraising and investing with commitments of rupees 127 crores. It is also pertinent to note that UTI got the Co-Investment Portfolio Manager, that is the CPM license, in August of 2022. We have received SEBI approval for two more funds, UTI Credit Opportunities Fund 1 and UTI Asset Reconstruction Opportunities Fund, which will be launching at the appropriate time. On the digital front, we have launched a new and revamped website for our investors and distributors, and with this we have completed the revamp of all our digital assets, be it our website, mobile apps, contact centers for both investors and distributors. Accompanied with multiple new features and seamless journey, we have now introduced robo-advisory capabilities that shall cover goal planning and management, innovative calculators, risk analyzers, etc. We have also launched 3-in-1 self-service digital KYC process riding on Aadhaar, DigiLocker and eSign, and have also extended the same for biometric-based KYC through UTI Mutual Funds offices. We now have a scalable and robust architectural design to cater to nearly 0.6 million transactions per day riding on microservice architecture. To ensure the enterprise assets are accessed securely through a trusted network and device, we have successfully rolled out the virtual desktop infrastructure. I would now request the Managing Director and CEO for his concluding remarks.
We will go for Q&A now.
Sure, sir. Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and 1 to ask questions. The first question is from the line of Swarnabh Mukherjee from B&K Securities. Please go ahead.
Yeah. Good morning, sir, and thank you for the opportunity. 2-3 questions from my side. First one on the yields in the standalone business. So there is an expansion of yields that we see. So just wanted to understand what would be the levers of the same. Is it only because of a higher mix of equity, or is there anything else to read into that? So that would be the first thing, sir. Second is on the SIP flows. So the run rate has improved in the current quarter. So how are we seeing that as we have moved into the first quarter of FY25? And just wanted to understand from your side, how the flow share would be across the distribution channels, the direct vis-a-vis the other intermediated channels, and what are the engagements that you might be having to drive this? And thirdly, on the expenses part, sir, if you could highlight what led to the increase in the sequential quarter-on-quarter increase in the employee benefits expense, and also if there could be any additional expense from the Paris office side in the consolidated entity, and also on the expenses front, the other expenses have remained fairly steady over the years. So any comments on that, how to build that going ahead?
Yeah, hi Sona. So I'll take the question on the yield as well as on the expenses side, and Sandeep will take care on the SIPs and the market flow. So on the yield, there have been a yield improvement across all categories of the fund apart from equity and hybrid. We have seen yield improvement in your cash and arbitrage fund around 2 basis points. In the income fund also around 1.5 basis point yield improvement is there. On the equity and hybrid fund, the yield improvement is close to around 5 basis points, primarily because of two factors. First of all, normally we estimate the commissions and this is our understanding of the business mobilization. The actual payout to be more or less. As you are aware that scheme expenses cannot be charged to AMC. So if there is any underestimate or overestimate of commission, the differential is adjusted in the management fee. So there have been some increase in the management fee on account of overestimation of commission. Secondly, as you are aware, B30 accrual commission was being stopped by SEBI in February 2023. So whatever the business we mobilized in till February 23, the commission was required to be paid for 1 year additional trail commission. Since the accrual has stopped for those businesses, that impacted our yield in the first 3 quarters for equity and hybrid fund, and the fourth quarter since we are not required to pay any commissions as the 1 year period has already over. So that has also improved our AMC yield under the equity and the hybrid category of the fund. Coming to the expenses, the employee cost, there have been an increase of close to around 10%, both on a sequential quarter as well as on a year-on-year basis. It's primarily because of two factors. One is a one-time expenses increase on account of gratuity, where because of actuarial valuation, the increase of close to around 5.5 crore. Also, the insurance cost has marginally gone up by 2.5 crore during this particular quarter. Apart from that, there have been an increase in employee expenses of UTI International. And Mr. Rahman rightly pointed out, we are expanding our business in the international fund, both in European market as well as in the North American market. Because of that, we have been recruiting people over there. So in UTI International, there have been a slight increase in the employee expenses of close to around 3 crore. The other expenses are almost flat, and we believe that this run rate should continue going forward as well.
Right, sir. So just follow up on the yield part. Wanted to just ask that, as you mentioned, this quarter we are seeing impact of some overestimation of commission possibly in the previous quarter, right? If I can understand correct. So then from 1Q, how should we look at? We go back to the earlier range as it was?
We are continuing with the same rate. So almost around 76 basis point yield is there on equity and hybrid fund. So we start the year with the same rate only.
Okay. And for the other categories, the increases that you highlighted, we should bake that in going ahead.
Yeah.
Understood.
Swarnabhu, on the SIP inflows, as you mentioned that we have seen improved inflows, and we are taking a number of steps to further improve our inflows in this category. One is the kind of effort that we are taking with our distribution partners across the country, even more so in the smaller cities where we are seeing significant traction for our fund. Also, what we are also trying to do is, try to pitch new products. Like we have different products which we have launched, the Balance Advantage Fund which we had launched last year. And we are also targeting the new generation investors who look at more of these index funds. So that also has helped us to improve our SIP. So these are the steps that we are taking, and we will continue further to take these steps. On the direct versus the distribution piece, it has been in the previous quarters, the equity and hybrid, which is the right parameter to look at it, because the distribution plays an important role in the distribution of equity and hybrid fund. That ratio remains similar. 30% is direct, while 60 to 70% comes from the MFD.
And
Rahman,
yes, we are extremely focused to enhance our engagement with our distributors. We have a very deep relationship with the banks as a channel for distributions. We are further enhancing our relationship with the top 1,000 distributors across the length and breadth of the country. Yes. So far as Paris office is concerned, we are not expecting any further expenses to be incurred.
Understood, sir. Just one clarification, sir. The distribution mix that you mentioned, that is for the flow. Would that be a correct assumption?
It is for the AEM, but for the flows also it is very similar.
Understood. Very helpful. I'll come back in. Thank you, sir.
Thank you, sir.
Thank you. The next question is from the line of Mohit Mangal from BOB Capital. Please go ahead.
Yeah, so thanks.
So the current participant has left the queue. We'll move on to the next question, which is from the line of Lalit Deo from Equirus Securities. Please go ahead.
Yeah, thank you, sir. Thank you for the opportunity. So, first question, as you mentioned on the yield, can you repeat the numbers on the cash and arbitrage and as well as on the debt stream? What were the yields and how much it has improved?
So cash and arbitrage, it has improved from 9 to 11 basis points, and on the fixed income from 21 to around 22 basis points.
Okay. And so on the flow side, so while we are taking steps to increase our flows across channels, but then the net sales side, on the equity side, we are still seeing some pressure on the reduction side. So could you highlight what were the gross sales during the quarter in the equity area, in the equity and hybrid categories?
So gross sale for FY20.
This quarter.
You want the quarter or FY24?
Quarter.
Yeah, quarter.
The quarter was close to our equity and hybrid fund was 2,981 crores.
Sure, sir. And so lastly, on the product pipeline, we have been looking to launch first. Any newer product pipeline, any newer products which we are looking to launch in FY25?
Yes, so we are planning to launch a multi-cap fund during the year, and we are also looking to further innovate on the passively managed space as well as on the thematic fund. So we have, of course, continuous efforts to launch new products. As and when the market cycles and timing is right, we will launch new products.
Yes, thank you, sir. I'll come back shortly.
Thank you. We'll take the next question from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi. So just firstly on the yield front, the improvement on the equity and hybrid category, you said it was 5 basis points. I'm correct that? On the sequential basis? Yeah. So out of that, how much part of that would have come from the B30? Because that benefit would have been only for 1 month, right?
No. In that particular yield impacted our margins for 3 quarters. So now since the payout is also not there and approval is not there, it's a continuous effort only. But not possible to give a breakup of how much is because of the commission saving and how much is on account of B30.
Okay. Because until February you would have paid the commission, and it's from March that the commission would not have paid. So that's the reason I was coming from that point. At whether the rates that you have mentioned are the exit rates, so the 5 basis points is on end-to-end basis or is on an average basis?
It's an end-to-end basis.
End-to-end. So this can sustain basically whatever you mentioned.
Yes.
Okay. Got that. And secondly, sir, there is an improvement in the yields on the international side as well, right? I think, and sustainability of the same. Could you just help us understand the same?
Yeah, international business, we are investing heavily and in the process of launching few of the fund as well. So we believe that yes, international business, the yield should actually improve. And this is the area we are investing heavily. So we are promoting 2 new products over there, India Innovation Fund as well as a private credit real estate fund. Both these funds have a slightly better margin. So we do improve that the overall revenue as well as the margin number should improve in UTI International as well going forward.
Sir, we've seen very high volatility in this yield internationally. Like for example, Q4 FY23 it was 0.57%. It continuously declined until 3Q, and now we've seen some improvement. So what was the reason for this continuous decline and now a recovery? Is the mix changing, or what is driving this improvement in yields after 4 quarters of consecutive decline?
There was a slight asset mix changes as well. So during the September quarter, we have witnessed some of the redemption in our flagship fund, which are the IDF category, and significant inflows has come into a fixed income fund. So that brought volatility into the yield number. But we are focusing very heavily on the equity category of the fund, and going forward, we believe that overall margin number should improve.
Okay. And sir, from expenses per standpoint, how should we look at employee expenses for next year?
So very similar to whatever the growth rate has been there for the current year. Maybe on a standalone basis, the increase could be around 2 to 3%. On a consolidated basis, the increase could be slightly higher because we are investing in all 3 lines of business. International, I have already spoken to. UTI Alternative also, we are strengthening our team since we are launching 2 or 3 new funds over there. And for UTI RSLs, we are also expanding our team for growing our private pension business as well as POP business. So on a consolidated basis, the number could be 100 and 150 basis points higher than the standalone number.
Okay. And last question on the tax rate. Could you guide for FY25? What would be the tax rate?
It should be in the range of 22 to 23%, I think.
Okay. Got that. Thank you so much.
Thank you. A reminder to all the participants that you may please press star and 1 to ask questions. The next question is from the line of Mohit Mangal from BOP Capital. Please go ahead.
Yeah, thanks for the opportunity. Am I audible?
Yes.
Yes, sir.
So I've got 2-3 questions. First, on the dividend, I think you have given a special dividend. So, going forward, should we expect the same, 55 to 60% dividend payout ratio?
Dividend, so what dividend is concerned, this is Rahman.
Yeah.
We have a policy that we always pay minimum 50% dividend to our investors. Last year we have paid around 66%. So this year 66% or 67% we have maintained for the current financial year, and we have given an additional dividend, and we made 100% of our profit we have distributed to our investors.
All right, sir. So next is in terms of the flow. So I think, apart from the equity, we saw, liquid also seeing net outflows, this quarter. So, what were the major reasons for that?
Liquid fund basically at the end of the quarter, most of the banks, they go for the exit, and therefore there was outflow. And again, it comes back on the first or second day of the next financial year. So it's a quarter-on-quarter problem which they all empty faces.
All right. Understood. So in terms of the life folios, I think we grew from like 1.2 crores to I think 1.24 odd crores. So I think any strategy over there, if you could increase the life folios, if it's any particular strategy. So I think we were around 12.2 odd million last quarter, and now we are around 12.4 odd million. So that's basically kind of a stable from the last 2 quarters. So any particular strategy, if we can increase the live folio, I mean, that would be helpful.
Yeah. So we are trying to increase our live folio. As we mentioned that we have invested in our digital assets. We have also invested in our partnership, as Mr. Rahman mentioned, that we are deepening our relationship with the top 1,000 mutual fund distributors across the country. And we are trying to increase our presence both digitally as well as physically on the ground. So through the SIP flows, through the through the partnerships, we are looking to increase the number of folios that we have. Currently, we have 1.24 crore folios, and we are confident that we will be able to add more number of SIP folios as well as normal folios in our account.
All right. Fine. Thank you and wish you all the best.
Thank you. We'll take the next question from the line of Abhijit Sakhare from Kotak Securities. Please go ahead.
Hey, hi, good morning. First question was a clarification on the balance sheet. So what we noticed was that there is a movement between September and March from property, plant and equipments to investment property. So if you could just explain that, please.
So we are owning UTI Tower. In UTI Tower, we have leased out 3 floors to NIS. And as per the accounting standard, if any of the property is leased out, that needs to be reclassified from building to investment property. So it's just a reclassification of asset. The overall property remains the same.
Okay, understood. And sir, second question going back to yields, if you could just help us sequentially, what has been the movement in overall equity and hybrid funds? The 5 basis points, is that quarter end to quarter start to quarter end, is that the movement?
Yeah. 5 basis point is a movement on a sequential quarter basis.
Understood. And last one is that on the flows, the general slowdown or outflows, you could just give some color around whether it's like 1 or 2 large funds which is driving it, and whether the rest of the smaller funds are actually seeing some level of inflows, or this behavior is more or less spread across all the top 5-6 funds. Something on that will be very helpful.
Yeah, so Abhijit, if you see, we have good performance both in our hybrid funds as well as income funds. Also in our passive funds, we have the tracking error, which is the lowest in the industry, and this has helped us to build the traction. In our equity funds, some of our larger schemes had a quality growth bias, and we are confident about their ability to perform over a full market cycle. Our value-oriented strategies have shown good performance, and we are able to capitalize on the performance in terms of market share for these funds. We have also fine-tuned our go-to-market strategy for the overall equity funds. As you would know that we have a strong position in beyond 30 cities, and we remain focused on growing our share in these cities. As I already mentioned, we have also revamped our digital assets, and we are getting good traction on these digital assets. Again, we have plans to launch funds across in the multi-cap fund as well as on the passively managed space as well as thematic funds. So these are all the efforts that we are taking for improving the performance and market share of equity funds.
Got it. This is helpful. Thanks a lot.
Customer type like retail HNI, where you're seeing relatively more outflow, some color on the quality of the outflows and also on the fresh gross sales that you're seeing in the equity and hybrid category. And lastly, if I look at your other expense number, given that you will be launching a plethora of funds next year, be it multi-cap or on the passive side or also on the thematic side, how should one think of NFO-related expenses in your other expense going into FY2025-2026? Those are my questions.
So ESOP, I will provide you the full year number. On the AMC, the ESOP cost was around 13.14 crore. At a consolidated level, it's around 16.8 crore. And for the next year, as of now, if we don't issue any further ESOP, the next year cost will be 4.5 crore on the AMC and roughly around 5 crore at the Concall level. As far as NFO is concerned, in terms of thematic or an index fund, we don't foresee much of the expenses on the NFO side because those will be soft launches. If the multi-cap fund, as and when we launch, there could be some amount of one-time advertisement expenses being charged, but we are cognizant of the cost and that number will not be that sizable.
Sure. On the quality of
equity flows, we had seen some redemptions from the banks and the national distributors, but equally in our other products which are doing well, we are seeing inflows coming from the same channel. So net it is similar.
So just if I can squeeze in one question on the yield part, and this is more of a clarification. If I understand correctly, there was some overestimation of commissions, and when the actual cash flows were compared with the estimations, you reported a yield improvement. So theoretically speaking, I mean, when you start from April 1 or when you look at first quarter of FY25, it should be on a normalized basis, on a correct estimation basis. So should 35 pips or whatever, blended yield that you have kind of booked in the standalone business for fourth quarter, is that the right benchmark to start off with?
Yeah, the 34 basis point is the right benchmark, and this yield estimation and comparison is being done on a quarterly basis itself. So, but we need to be cognizant of the fact that no scheme expenses can be charged to AMC. So normally it has to be on a conservative basis. If any upside is there, that gets adjusted in quarter 4. But 34 basis point is the right number to start at the beginning of the financial year.
Got it. So, thank you and all the best.
Thank you. Participants, you may press star and 1 to ask questions at this time. The next question is from the line of Pratham Shah from PD Exports. Please go ahead.
Hello. Hello.
Yes, sir. Please proceed.
Yeah. Good morning. I had a question regarding the stake sale of PNB, Bank of Baroda, and SBI. There were some reports that they wanted to sell their stake. So, is there any progress on that?
No, we don't know anything about this, and we can't offer any comments on this piece. This is their matter, shareholders' matter. And we as a management, we have no role to play in this.
Okay, thank you.
Thank you. The next question is from the line of Ajay Jain from Makarand Finvest. Please go ahead.
Yeah, good afternoon, everybody. Wonderful figure, sir. Congratulations on that. While going through your investors' presentation, sheet number 38, that is consolidated statement of profit and loss. Sir, can you please throw some light on net gain on fair value changes? Because in FY23 it was 99 crores and FY24 it is 500 crores. I presume it has something to do with the market valuations of shares or the investments that you have made. But can you please let us know? Because the figure is a huge difference. Going forward, what do you feel of the same? My second question is on sale of services. We have 5% growth right from FY23 1131 crores to 1182 crores. Going forward, what do you feel of this?
So I'll take the question on the net gain on fair value changes. So as you are aware in the investor presentation or itself we have mentioned we have a total consolidated investment of around 3,833 crores. Out of that, almost around 737 crore is invested into hybrid category funds of UTI, 709 crore into equity category, and almost 557 crore is invested into an equity schemes of UTI International. These are equity-oriented schemes, and as you are aware, the market during the last financial year has given a return in excess of around 29%. I am saying for the Nifty. So because of that, there have been a mark-to-market appreciation, which has significantly increased the fair value changes number. On the management fees, yes, the 5% growth is there, and we are hopeful that with the growth in the AUM, especially on the equity and hybrid category, we should be witnessing a positive growth in the management fees as well during the next financial year.
Sir, do you feel it would be greater than the current 5% growth?
Yes, we believe in that. Yes, we are quite confident.
Fine. And as I understand, the second fair value changes is basically the market improvement in the investments, equity investments which we've done. So just what do you feel of going forward in this particular assignment? Because this is the major income which we are earning, and it makes a lot of changes to the profit and loss account. So your views on it going forward, sir?
See, we can't give any forward-looking views on the market appreciation. We will give you quarter-on-quarter details when it comes. So please wait for some more quarters.
Fair enough. Thank you so much. Wonderful result. Keep it up.
Yeah.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Imtiazur Rahman for closing comments. Over to you, sir.
Thank you very much for joining this call. I wish all of you a great financial year and nice weekend. Thank you so much. Thanks, Sandeep, Vinay, and Surjit for joining me.
Thank you.
Thank you.
Thank you, everyone.
Thank you, members of the management. Ladies and gentlemen, thank you for joining the call. In case of any queries, feel free to connect with Adfactors Investor Relations team. Once again, thank you for joining us. You may now disconnect your lines. Thank you.